is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian is with Midwest Market Solutions. Can you say 9 in a row? Yeah, December corn futures now have settled higher for 9 straight sessions. I guess, could you say half a penny? Because that December contract came within a half penny of hitting $5. Well, Mr. Hoops, what's happening here in the corn market?
Well, we talked this morning about the corn would be a little stronger, probably running into psychological resistance around $5, and we just missed it. We went 4.99.5, as you mentioned, and kind of found some hedging pressure up in that area, closing just off those highs. But the combination of factors at play here that has given us the strength. One of those things is a surging wheat market. We're keeping pace with the wheat. Surging crude oil market means likely higher fuel costs to put this crop in, to grow it during the summer, to harvest it in the fall. So we're putting a premium into the farmer to plant this corn crop. You also have higher fertilizer costs if you, in fact, apply the fertilizer applications that you normally would. A lot of producers are cutting back. They said last fall they were going to cut back on fertilizer for the wheat crop. Here's the same thing. They're going to cut back on fertilizer for this corn crop. And this market, I think, is trying to add in some premium to get producers to go ahead and plant the crop, fertilize the crop, because we need maximum yields, because we are going to plant a little bit less corn acres than we did a year ago. Soybeans, you can plant less, you can plant those acres and use less fertilizer, maybe use less diesel fuel to produce the crop. So they likely will plant more soybean acres, maybe less corn acres, and that's why soybeans have tried to keep pace with corn and wheat. But I think it's done a fairly poor job, but we are back up near those old highs once again. It may need to put a little bit more incentive out there to switch over from corn to soybeans if it wants to gain a few more acres.
Well, you mentioned wheat in there. What are your thoughts about how we finished up the wheat market on Wednesday?
Yeah, not totally surprised, I guess, that we'd see some profit taking in Chicago. That's the weakest leg between Minneapolis and Kansas City as far as fundamentals go. Spring wheat, we planted less acres than we have in many years. Winter wheat crop, we didn't plant many acres either, small since 1919, but we do have a really flourishing soft red wheat crop grown in Missouri and Illinois, Ohio, parts of Indiana. Out in that region, received a lot of abundant rainfall, really good growing conditions. That crop is going to flourish, but it's a hard red out in western Kansas and Nebraska and Oklahoma and Texas, Colorado, that's really suffering, and we have smaller yields. Some expecting maybe 200 million bushels less than year-ago levels because of the smaller planted acres and reduction of yields. So that's where the premium is going to lie. I think that spread between Chicago, Kansas City, it's already at record levels, probably is going to expand even further.
Something else that happened on Wednesday, FOMC, and what probably, I guess I'd be more than surprised if it's not his last meeting, Jay Powell and the FOMC. Final thoughts there?
I agree with you. It is probably Jerome Powell's last meeting, and for the third time in a row, they decided to not cut interest rates. And based on comments of what he said, the odds for a Fed interest rate cut have fallen to the lowest of this year. Now just 44% likely that they will cut interest rates at least one time this year. So there's no guarantee we're going to. I know this President Trump is backing this and may try and influence his decision, and I know he would like to lower interest rates, so there's always that caveat. But right now, the market is not anticipating any type of a rate cut going forward in this year.
For those who, hey, a rate cut sounds good. It's kind of like, hey, I'm looking on a label here, and it shows no fat. That must be good. That means I'm not going to get fat if I eat this. I know that's simplifying, but for those who might not quite understand rate cuts and how they affect ag, can you help us connect some of these dots here?
So, there's just like your analogy of eating foods that are low in fat. There may be some other substitutions or something else in that food that may contribute to weight gain. It may not just be as easy as eating something with no fat. It's not quite as easy to look at this and think a lower rate cut would be good for the economy. Yes, it should help out the economy, spurring growth. And for a producer this year, if you're faced with higher fertilizer costs and higher fuel costs, it's one cost that could drop this year while everything else is seemingly increasing. Lower interest rate expenses on money that you're borrowing potentially could save you some money. So there is that for the producer, and that's certainly something that could help them. We also, want to help spur on demand going forward here for our products. We have a lot of crop right now. We have 7-year high supplies in corn. We have big supplies of wheat. If we harvest this crop, I think we're probably pricing ourselves out of this export market at these higher price levels. We're already 40 to 50 cents more expensive than the next world supplier of wheat, 20 to 25 cents more expensive for corn, around 40 cents a bushel for soybeans. So that we're priced out of our export market, so we need a weaker dollar to help stimulate some of that demand, make our products appear more cheap. And if we see interest rates cut, it very well could strengthen our dollar and have that opposite type effect. So we have to be careful when we're talking about what we want, because it may not be exactly what we need.
Good points. Thanks for playing along with my analogy there, because, again, I think sometimes we look at something and go, oh, this sounds good. And it was best described, I think, by President Trump early on. He said, clean water, that sounds great. That sounds exactly great. We ought to have more clean water. And not understanding what the waters of the U.S. and that definition was doing was not actually helpful. So anyway, long explanation to say, don't look at no cuts and think this is negative all the way across the board. Quick break here. I'll stop talking. We'll hear back from Brian in just a moment. Brian Hoops is with Midwest Market Solutions Online, MidwestMarketSolutions.com. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our guest today, Brian Hoops, Midwest Market Solutions. Brian, I spent too long talking in the first segment, so I'm going to head to the dugout and sit on the bench and let you knock some runs in here as we talk about livestock futures. And speaking of livestock, live cattle, April contract, that one's about to expire, but it's been chasing something known as cash, right?
That's right. And I should clarify something from the first segment. When you lower interest rates, it weakens the dollar. There is a chance you could always strengthen the dollar, but usually it weakens the dollar, which would help our exports if that happens. So, with cash markets here leading the futures higher, and I think the first signal was last Friday when we had some cleanup trade at higher money, $249, $250, for the Packers to pay a couple dollars better than what they paid earlier in the week as a cleanup basis. It kind of gave us an indication that maybe they are looking for some cattle. They need to fulfill some inventory levels. And earlier in the week, we saw that they expanded the kills on the weekend, and that helped out our kills come in larger than the prior week. So there was some warning signs here that, hey, this cash market may start to move higher. Now, I didn't expect that we'd see this type of cash movement or cash trade that we saw, especially on Tuesday. That Tuesday cash trade caught everybody off guard. We looked at midday and saw Packers bidding $250, and by golly, they got $250 all the way up to $255 by the end of Tuesday. So Packers really aggressive in buying the cash markets. It's helped out the futures. April futures go off the board at noon tomorrow. They were sharply higher in reaction to the cash trade in June, not too far behind. So we spent a lot of the day actually seeing some profit taking, and we may see that again Thursday and ahead of the weekend as sometimes when the Packers get really aggressive and buy a lot of cattle at sharply higher money, sometimes that's a peak, at least a short-term peak anyway, and we see the cash markets pull back in the weeks to come. And so I wouldn't be surprised at all to see that happen if we see tomorrow, get the export numbers in the morning, maybe we see some higher prices and then price in this week's cash trade, next week's ideas, because apparently Packers are buying for next week already, trying to get more cattle inventory. So I think there's a little bit of room to the upside, but again, can't rule out some profit taking going into the weekend.
Okay, and before I let you go, energy markets, I know you've been watching those as well, right?
Yeah, really higher crude oil markets today. We blew through the old resistance points on the charts. June crude had a high up around 104.50 from March the 9th. We cleared that, and we added to those gains during the session. President Trump has indicated that he wants the U.S. to prepare for some strikes against Iran here, and they may be a very short, powerful wave of strikes against Iran as they want to open the strait, and President Trump has indicated it's going to be on his terms and not on Iran's terms. All
right. Brian, if we want to keep up with you, carry on the conversation, keep it going, how do we do it?
Well, you can reach me directly at 417-501-5132. And as always, you can go to our website, MidwestMarketSolutions.com, and find a list of our offices around the Midwest.
Brian Hoobs is with Midwest Market Solutions. Plus, you can catch him on Market Day Report, Mondays, Wednesdays, Thursday, and Friday mornings, 9:15 Eastern Time. And this is Commodity Wrap.